Hello and welcome to AI Market News by LM. Before we get started, just a quick heads up. This video's audio is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. All right, let's jump right in. It is Wednesday, October 15th, and what a fascinating day in the markets. We've got this classic tug-of-war going on. In one corner, there's a really strong dovish signal coming out of the US Federal Reserve, which is getting everyone excited. But in the other corner, we've got these geopolitical tensions between the US and China just kind of simmering in the background. So the big question is, which one of these powerful forces is winning? Let's break it down. So here's the game plan for today. We're going to start with the Fed, because that's the biggest story. Then, we'll dive into some really interesting earnings reports that are giving us a few surprises. After that, we'll tackle those geopolitical risks, get a quick snapshot of the market action, check the overall mood, and then we'll look ahead to see what's coming up next.
Okay, first up, let's talk about the single biggest thing pushing markets higher today. And that is a crystal clear signal from the US Federal Reserve that some easier monetary policy is probably right around the corner. Now, when we say dovish, that's just Fed speak for leaning towards lower interest rates, which usually helps get the economy going.
And it all comes down to these words from Fed Chair Jerome Powell. The really key thing here is his focus on the labor market. He's talking about significant downside risks and a sharp decline. Now, you might think that sounds bad, right? But the market heard that and thought one thing and one thing only. A rate cut is coming. They see this as a green light.
And you can see the reaction right here. Traders are now pricing in a whopping 92.4% chance of a rate cut at the Fed's next meeting on October 29th. Powell basically gave the market exactly what it wanted to hear. Any doubt that was kind of lingering, it's pretty much gone now, and that's just unleashed this huge wave of optimism.
But wait, there's more. On top of that, Powell also hinted that they might stop shrinking their balance sheet, what we call quantitative tightening or QT, sooner than everyone thought. So you've got this 1-2 punch, a very likely rate cut, and an early end to QT. It's like pouring gasoline on the market's fire right now.
Okay, so with the Fed setting the stage, let's see how this all trickles down to the real world. How are companies actually holding up? Well, earnings season is giving us a really interesting and honestly kind of mixed picture. So let's look at ASML. This is a huge, super important tech company in Europe. Their results were a bit of a mixed bag. The good news? Future orders look great, way better than expected, and that's all thanks to the massive spending on AI. The not so good news? Their current sales actually missed the mark, and they're pretty cautious about China going forward, which really shows you the real-world impact of these trade issues.
Now let's switch gears to the luxury world, where we got a huge positive surprise from LVMH. After a pretty rough patch, they're back to growth and it's across the board. So what's driving it? Well, more people are walking into their stores, and maybe even more importantly, we're seeing a nice rebound in China. This is a great sign, not just for them, but for the whole luxury sector.
But let's not get too carried away. Even though US banks like JP Morgan posted some fantastic earnings, their CEO, Jamie Dimon, came out with this pretty stark warning. He's talking about hidden problems in the credit markets. So the message is, yeah, the headline numbers look good, but be careful, because there could be more trouble lurking just beneath the surface. And that trouble lurking beneath the surface is the perfect lead-in to our next topic. While everyone's watching the Fed, there's this major geopolitical story brewing between the US and China.
Just look at this timeline. You can see how quickly things have escalated in this sort of tit-for-tat game. China tightens its grip on rare earth minerals, and this is stuff that's in everything from electric cars to defense tech. The US Treasury Secretary calls it a bazooka. Now the White House is threatening to halt trade in cooking oil. These aren't just little jabs. These are pretty serious moves in a trade fight that seems to be getting deeper. So that leads us to the million-dollar question. With all this going on, why are the markets basically just shrugging it off? And the answer takes us right back to where we started. The story that's winning right now is the Fed. The belief is that if things get really bad, the Fed will just step in with more cheap money and save the day. Right now, that Fed's safety net is just more powerful than the geopolitical fear. Okay, so let's translate all that talk into some actual numbers. Here's a quick, data-driven look at how the markets are moving today.
No surprise here, US stock futures are looking very healthy, firmly in the green. You can see the tech-heavy NASDAQ 100 is leading the pack, up almost 0.75%.
That really reflects that risk-on mood we've been talking about. The Dow and the S&P 500 are right there with it, posting some solid gains too.
Now, over in currencies and commodities, that dovish Fed signal is definitely putting pressure on the US dollar. We're seeing the euro climb against the dollar, and the dollar is also weakening against the Japanese yen. Meanwhile, look at gold. It's surging over 1.3%, getting close to those record highs as investors look for a safe place to park cash. Crude oil, though, is basically flat, kind of caught in the middle between all the economic optimism and the trade war worries.
So we know what the market's doing, but what is it feeling? Is it fear or is it greed that's in the driver's seat right now?
And the answer is pretty obvious. It's greed. The CNN Fear and Greed Index is flashing a 78, which puts us deep into extreme greed territory. This tells us investors have a huge appetite for risk right now. Now, sometimes when this gets this high, it can be a sign that the market is a little overheated, but for now, the bulls are absolutely in charge.
And this isn't just a vibe, it's based on data. The index looks at 7 different indicators. And right now, things like strong market momentum, a really high demand for risky junk bonds, and very low demand for safe haven assets are all pointing in the exact same direction. It's a very broad-based signal of bullishness.
All right, let's wrap this up by looking forward. What are the big events on the calendar that we need to keep an eye on? The things that could either keep this party going or maybe throw some cold water on it.
Based on the economic calendar from investing.com, there are a few key dates to circle. On October 16th, we're going to get earnings from TSMC. That's a huge one for a read on the whole semiconductor industry. Then on the 17th, Schlumberger reports, which gives us a good look at the energy sector. But the main event, the big one, is October 29th. That's the FOMC decision, when we find out for sure if the market gets the rate cut it's so desperately hoping for.
So that leaves us with this final thought. We have this really clear conflict, right? We've got a supportive Fed that's basically giving everyone a green light to take risks, but at the same time, we've got these very real and growing geopolitical tensions. And that leaves us with a big question. Is the market getting a little too complacent? Are we relying too much on that Fed safety net and maybe ignoring the risks from overseas? That's really the key thing we need to watch. Thanks for watching. Don't forget to like and subscribe.